Good afternoon, traders. This is Christian from Tribeca Trade Group, and this is your end of day market recap for Wednesday, March 6th. All right, so some continuation, obviously, from yesterday, from where we rebounded yesterday. Just a reminder, yesterday we came down to the bottom of the value area for the week, both in the S&P and the Qs, held that, bounced, and then kind of ran out of momentum towards the end of the day. So we're going to talk about that. I'll talk about 5 stocks I'm watching for the next coming days. Some of them kind of interesting, some of them possibly tradable. So we'll kind of break that up. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. Please read the full risk disclaimer there. So let me talk about the indices first, and then we'll talk about what's kind of going on under the hood a little bit. All right, so here's what I was referring to, right? Just again, this is a 1 hour chart of S&P futures. Sometimes again, I can really get some signals, especially when you don't really have great signals, like let's say on the daily chart. But we could really find some levels to trade from, and using the MarketWebs and volume at price. So that was yesterday, right? We broke into the value area, 80, that triggered the bearish 80% rule, which completed there at the bottom of value. We held it. Overnight market was where we made all the gain, or the majority of the gains, right? And the ticks were really hot this morning. Like if you follow something like this, I think it's good to have this up, because when we open up, and we're really hot like this, like over 1,000 ticks, it's a pretty extreme reading. Sometimes we work that off and then we go back higher. But you can kind of see how this afternoon went. It was just a lot of chop, back and forth, back and forth, back and forth. Why did we lose momentum for the day? Well, it could be a little bit of a tug of war with buyers and sellers. People taking some profits, maybe getting caught in some positions yesterday, realizing the market's up. Hey, let me get out of jail free card, and I can get out of some of those positions. That could be what's going, on a little bit, in terms of, overall positioning, right? It could also be that we've got more economics for the week too. We get to hear from Powell once again tomorrow at 10 o'clock, his second day of congressional testimony. We're also going to get a monthly jobs report that comes out on Friday. Maybe people are a little bit apprehensive about that jobs report. Remember, last month that report came in better than expected. The big surprise last month, in my opinion, was the big tick up in average hourly earnings, right? Which is one of those gauges of inflation that came in 0.6. They're not looking for that hot of a report this time around. It's 0.2. But again, could inflation, that will give a sense of inflation is still running decently. So that's on Friday, and those are some economics to watch. Again, here's Powell speaking tomorrow at 10 a.m. All right, so that's we still have some of those events to kind of get through for the week. All right, so let's talk about a couple of the positives, a couple negatives. I still see more positives right now in this market. I think maybe the negatives are what inflation, could be if it's creeping up again, right? And we just don't know, and we'll see if that kind of pans out. But one of the things was, if we look at what, two of the macro indicators that I look at, of course, bonds and the dollar. I'm just going to talk about one of them right now, the dollar. Right? We know that when the dollar is super hot, do I have the right thing up here? I think I do. I think I just have to hit adjust on this. Maybe I don't have the right one. Oh, I get the 1 hour chart. That's why. That is why. All right, let me fix this. Sorry, a little bit of a user error. But here's what the here's what the dollar is doing. Sorry, I make a mistake like that, I just kind of laugh it off. But yeah, I remember, going back to about 2-3 weeks ago, I think folks were really getting worried about the dollar breaking to new highs. We don't see that right now. For a while, I was even saying when this cooled off that we were still in an uptrend. I guess we're still in an uptrend, but we are breaking here. We broke the March value area, so breaking to the downside, right? And generally, what that means to me is more of a risk on market. I say generally because that's only one factor and we look at a multitude of factors. Of course, price is the most important factor to me by far. Maybe, out of all the, if you put all the things that I look at and total them up to 100, probably price is probably about 65% most important to me, right? That's what rewards us. We can't argue with price. We do like to look for some clues in other things, such as the dollar. So I think the dollar breaking down is a good thing for equity bulls, right? Now, of course, same thing with TLT. I just don't want to see rates rip higher, which they're not doing right now. In fact, they're going the opposite direction. All right, we'll talk about a couple other themes of the day really quickly. So this was, you could see percentage change from the open in this column, something that I talk a lot about because it just kind of gives me a sense of what transpired for the day, if there was more buyers, if people were taking profits. And you could see percentage change from the open for all of the indices, right, was a bit of a cooling off, right? So the beginning of the day was the strongest, right? And that just reminds me as well, some people I think need this reminder from time to time, is that that's the majority of the gains take place in the after hours, right? So buying the close and selling the open, right? If you're going to pick between one or the other, right? Now it's best to, like, overall, the market, makes gains over time, right? But if you were to have to make a decision about buying the close and selling the open, that has drastically outperformed buying the open and selling the close. All right, just to put that in context. So more often than not, now it's not always the situation where the market is down during the day, giving back gains. But again, when usually there's a gap up, that is the time to be doing more selling than buying. All right, it's just a general trading principle. All right, so that's one thing. And the other thing, and this was even the case yesterday, and what kind of kept me in this market yesterday, or one of the reasons, was that the breadth was not really negative, was not that bad yesterday. It was negative, but it wasn't super, there wasn't heavy selling pressure yesterday. Again, some of the bigger names, which have been weak, are masking what's going on overall in the market. Today, the breadth was strong. Right, and it's one of the things that I send out in my Substack post every day, is talking about. Let's see if I can bring this up really quickly. Right, here we go. Here's today's Substack, right? And every day when I send this out, I kind of summarize what we're seeing in terms of S&P 4-week new lows versus new highs. And why do I look at 4-week new highs versus lows? Because it gives us a sense of, like, the short-term trend and if something's changing under the hood, right? You could see, and I didn't even categorize this as like that there was one or two groups that really stood out. It's basically a little bit of everything, right? And even tech, right? And now again, a lot of this is some of the semiconductors, but right, I keep hearing about tech breaking down. Right, there's still more 4-week new highs than there is new lows in tech. Now, again, some of the big names, right, are kind of masking that because they're breaking down and they're showing signs of exhaustion and of kind of, things like Apple have gone down, Google, so on and so forth, right? But that's just a little bit of a changing of the market, changing of the guards. It's not that important right now, in my opinion. So there you have it. And I had more, of course, more things and more charts that we go over every day in terms of what I send out. Take a look at ttgtrading.substack.com. All right. And then finally, cyber, which I wanted to go over this chart with you too. I thought it was going to be very interesting if cyber was going to get its mojo back today, but no, not so much. And if we look at the chart, let's just bring this down a little bit. If we look at the chart of CrowdStrike, which I do believe is the leader, so I think it's the one to definitely watch, you could see what happened. Look at the volume. I'm not sure if that's such a good sign, regardless of what I think, right? You have levels to watch. Take a look at this 334 level. That's the top of the March value area. Again, where are we getting that level from? Well, if we, we can go in here and we can turn on, if you like, we could turn on the volume profile, right, and show market profile, right? So this is based on volume at price. So this is all of last month's volume, right? And we're basically putting one standard deviation around all that activity, right? And that's where that becomes why that becomes so significant, right? Is we're looking at last month's volume at price and coming up with some statistical levels, which is 334. We could also do this on the 1 hour chart. And you're going to notice too that we came in here to the top of value. So we're still holding that, right? That's another level down if you want a little bit more tolerance for the week. But if we break 324, then I think that earnings move is being faded, and that just means that the group is a little bit out of favor for now. So that's something that I'm watching. I actually reduced my exposure to CrowdStrike in the TTG trend portfolio earlier in the week, right? I still kept it in there. I just reduced the weight, right? I think it's the leader within the group. But if it doesn't hold in there, and the 50-day moving average, it held a couple times, but I would be very cognizant that maybe this group is losing its momentum for the time being. Again, right? You kind of have to think about, what your time frame is. Do I think CrowdStrike is going away or is not going to be a leader for years to come? No, I didn't say that, and I don't think that. But I think for the short term, maybe it's, this group has had a big move higher, and sometimes groups like to consolidate after they've had a very big move. So that's something that we'll be watching. A couple other stocks, Palantir, right, which I tweeted about earlier. I talked about a little bit about overhead supply. Yes, short-term stuff. Sometimes some of my messages get lost a little bit on Twitter, but yeah, it came up to this virgin point of control and got a little bit rejected, right? And what that means is you could take a target there at 26, and then if you want, you could add it back $1 cheaper, right? So you could really kind of use the value areas to kind of be dynamic with your trading, take some profits here, add back on a little bit of a dip, right? And be flexible in your trading, knowing where there's overhead supply. Now, overall, this looks pretty good here. This is a break of this range here. And I think that, the fact that it managed to get around or over that virgin point of control, and look at the volume, by the way, right? That next move up that I would be talking about overhead supply is up at 29.88. That's a nice little risk to return. So this will be on my watch list tomorrow. I do not have a position in it. DXEM, this is not a stock that I've been paying attention to recently, but the group has got strength. I've talked about Abbott, TMO, the whole group, IHI. So this is pretty interesting. Look at speaking of volume, look at the volume in DXEM today, getting over getting above the value area for the month, which is down here. I know that's a little bit hard to see, and then getting over the yearly value area on good volume. So here is the story behind this today. Right, Dexcom breaks out as FDA clears it to enter a new market, obesity. Kind of heard about that theme a little bit this year. So it's interesting, and I like stocks that break resistance like this on heavy volume. So I'll be watching this one tomorrow. Just a few other stocks too. This gold, which is working quite nicely. We got long in the beginning of, was it on Friday? No, it was on Monday that I got long. This is acting really well. I took another target in this today. Very nice. So, gold is breaking out. I was a little bit hesitant to get involved on Friday. I wanted that confirmation because it's been a tricky trade over the last couple of years. So we got a nice breakout. At this point, I wouldn't chase this move. Look at how extended it is from the 5-day moving average, maybe a check back, right? And that's, again, same thing where I can add back to my position now that it's gotten a little bit extended in the short term. The RSI is like a 80 right now. So yeah, it's extended in the short term. Speaking of extended stocks, I bought this one right on the close yesterday after we had that nice recovery and took some profits, up another 3%. Ultimately, I think that this could run to 1,000, right? But I'm going to take profits along the way and add on dips, right? That's the plan of action for this stock. Last stock that I'll talk about is Toast, right? Very nice move here. Again, getting a little bit extended here, but this is also above its value area for the year. Really nice continuation in Toast. And I lied. I'll bring up Kava too. I did start a position in this morning. Wasn't really that convincing, but did get back above the 5-period moving average and bounced at some support here at the top of value. Guys, have a great night. Much more to follow tomorrow, and I'll see you in the trading room tomorrow.